Blue Chip Bulletin. Financial market updates and insights.
Okay, so Microsoft's latest earnings report, it looked absolutely spectacular. I mean, they crushed expectations pretty much everywhere you looked, especially in their cloud and AI divisions. So why on earth did the market freak out and tank the stock, wiping out hundreds of billions of dollars in value? It makes no sense, right? Well, that's the paradox we're going to unpack today as we dig into Microsoft's massive bet on the future of AI.
All right, let's just start with the headline numbers because they are wild. We're talking $81.3 billion in revenue for just one quarter. That's a 17% jump from last year and way more than Wall Street was even hoping for. I mean, that is just raw financial power right there.
And what's driving all this? Well, it's their cloud division, Azure. Get this, it grew 39% year over year. For a business that's already this huge, growing that fast is kind of unheard of. It's a massive signal that the demand for their AI stuff is just exploding. And their CEO, Satya Nadella, he didn't mince words on the earnings call. He basically said, you know that AI business we have, it's already bigger than some of our other businesses that took us decades to build. That is a huge statement. It just shows you how all in they are on AI and how fast this whole thing is taking off. Which brings us right back to the central mystery. The numbers are incredible, growth is speeding up, so why did the stock plunge nearly 7%? It feels like the market's reaction is from a totally different planet than the actual results. And that disconnect, that paradox, is exactly what we're going to figure out. Okay, so here's the plan. We're going to look at what's really scaring the market, break down Microsoft's big AI strategy, then we'll wrap up by looking at how you can even begin to value this company right now. All right, first things first. Let's put on our detective hats and figure out what exactly spooked investors. Because even with those amazing results, there were three things hiding in the details that really had people worried: the cost, the customers, and the forecast for what's next. So the first big red flag was this number right here, $37.5 billion. That's their capital expenditure, or CapEx, for just one quarter. CapEx is basically the money they're spending on physical stuff, servers, data centers, all the hardware. And that number is up 65% from last year. A huge chunk of that is going towards AI chips, like GPUs, which don't last forever. So naturally, investors started asking, whoa, are they ever going to make that money back? The second worry was a little more hidden. It's in their commercial backlog, which has a super fancy name, remaining performance obligation. All that really means is it's revenue they've already locked in for the future from contracts. And yeah, $625 billion sounds amazing, right? Super stable. But the devil is always in the details. And here are those details. When you break down who that money is coming from, analysts are pointing out that almost half of it, 45%, is tied to one single customer, OpenAI. Now that's a huge risk. If anything ever goes sideways with that one partnership, that's a massive hole in their future revenue. And fear number 3 was about the future, the guidance. This chart shows it perfectly. It's like Microsoft is a car with two different engines. You've got the AI and cloud engine, which is just screaming ahead at 39% growth. But then you have the other engine, their older stuff like Windows and Xbox, and that part is actually shrinking. So that legacy business is kind of acting like an anchor, dragging down the whole growth story. And this question from a Morgan Stanley analyst during the call just hit the nail on the head. It really summed up what everyone was thinking. It boils down to this: is Microsoft spending money on AI way faster than they're making money from AI? Okay, so we've heard the fears. Now let's hear Microsoft's side of the story, their grand strategy. Because they'd argue that what the market sees as risks are actually very deliberate, strategic bets on the future. They're not just trying to sell more cloud services. They're trying to become the foundation for the entire AI economy. So in response to that analyst's question, CFO Amy Hood said something really interesting. She basically said, look, if we wanted a bigger Azure growth number, we could have gotten it. If we'd given all our new AI chips to our cloud customers, that number would have been over 40%. But, and this is key, they chose not to. They're deliberately holding some of that firepower back for themselves. And that's because all that money they're spending isn't just to make Azure bigger for other people. It's for their entire AI strategy. They're using those chips to power their own products, like Copilot and Microsoft 365. They're giving them to their own engineers to build the next big thing. And then, whatever's left over, that's what goes to their external Azure customers. It's a full stack play. And this spending is all about a much bigger evolution of their business. Think of it in 3 steps. Step 1 was AI as a tool, something like Copilot. Step 2 is AI as a data layer, something that actually understands what's going on inside your company. But the end game, step 3, is AI as a platform, a place where companies can build and run their own autonomous AI workers or agents. And this is how they plan to get a return on that crazy spending. The long-term plan, we're talking 2 to 5 years out, is to package this whole AI platform into a brand new super premium subscription. The rumor is it'll be called the E7 bundle, and it could cost as much as $99 a month per user. I mean, that is a gigantic leap in how much they can make from each customer. Okay, let's zoom out a bit, because this whole strategy isn't just about Microsoft making more money. It's their answer to a massive threat that could change the entire software industry. And it's also a key move in what's becoming a huge AI arms race.
So first, that threat. People are calling it the SaaSpocalypse. And the idea is pretty simple. What happens when AI agents can do the work that humans used to do inside software? Like, if an AI can just file your expense report for you, why would your company pay for you to have a license to the expense software? That's the fear that's been hammering stocks like Salesforce, and it's exactly what Microsoft is getting ready for.
And this is where Microsoft's strategy is so clever. They're basically saying, okay, maybe you won't need to buy as many software seats for your people anymore. Fine. But all those AI agents doing the work, they're going to need a secure, reliable platform to run on. So Microsoft is building that platform. In a way, they're shifting from selling the software to taxing the AI that replaces the software. It's both a defense and an offense at the same time.
And look, this isn't just a Microsoft story. They're not the only ones spending like crazy. You got Google, Amazon, Meta. They're all pouring tens and tens of billions of dollars into AI infrastructure. This massive spending spree by the biggest players in tech has really defined the AI trade on Wall Street. So with all that in mind, what does this mean for Microsoft's value right now?
Well, the bottom line is that all those market fears we talked about have created a real disconnect. After the stock dropped, it was sitting more than 25% below its recent highs. And its PE ratio, which is a classic way to measure if a stock is cheap or expensive, hit a 3-year low. So by that metric anyway, the stock started to look cheaper than it has been in a good long while. Okay, so to pull this all together, let's look at 3 different ways this could all play out for investors. Which one you believe really depends on just how fast you think Microsoft's huge AI bet is going to start paying off. All right, first you've got the bull case. This is the belief that AI starts making the money like right now. The E7 bundle is a home run, and the market is just completely missing how fast this is all happening. Then there's the neutral case. This says, yeah, the plan works, but it's a slow burn. The heavy spending continues for another year or two, which keeps profits tight. And finally, the bear case. This is the fear that they just can't make real money from AI, all that spending was for nothing, and in the meantime, the SaaS apocalypse eats away at their old business before the new one can get going. So in the end, it really all comes down to one big question. Is Microsoft spending billions of dollars building a solution for a problem that doesn't exist, or are they laying down the tracks for the entire future AI economy? How you answer that question is what will determine if all the spending turns out to be a historic mistake or one of the most brilliant investments of all time.
Thanks for watching. Please subscribe here for more financial market updates and insights.